Thomas Westwater in Chicago. Gentlemen, welcome to Overtime.
Good to be here. Yeah, whole new crew, almost.
Heck yeah, I'm here to mess it up, man. I'm definitely here to mess it up. We're going to have fun. You know what I'm saying? You know how
I love it.
You know how it goes.
I love it. It's the perfect day, actually, for you guys to take over the show because the macro part of this story has gone to sleep. There's nothing going on here. It's quiet. Everybody heard from the great man on Friday. Nobody seems to want to make anything of it. We got NVIDIA tomorrow. Thomas, you want to start us off here? You wrote the piece on NVIDIA earnings yesterday. Enlighten the folks. What are we looking for here?
Yeah, I think there's really, besides for the EPS and revenue numbers that you're looking for to obviously beat, which NVIDIA has a good track record with beating estimates. The last 4 earnings, it's being on EPS, it's being on revenue, so it's done well in those metrics. What the market wants to hear is probably commentary from the CEO. Number one, on China, they're developing a new chip from the H20 that's going to be technically more advanced, but also raising concerns from some Chinese authorities that the U.S. government has their hands a little bit too much in the cookie jar of NVIDIA, and they are maybe putting in kill switches, backdoors, stuff like that. So you'll see the CEO reassure markets that they're not doing that. He's already done so. And he'll want to, solidify this revenue stream to China and guide expectations there. Another thing is with the Meta news recently that they're restructuring, which is coming alongside less spending for now at least. There might be some questions to him about, the broader AI investment theme. Is spending in data centers on AI going to keep pace? Do they expect it to drop off at all? If they, hinted at that even a little bit, I think the markets would latch on to it and perhaps create a negative reaction. So I think I think an EPS and a revenue beat are pretty well forecasted based on their recent performance. So it's going to come down to those comments.
Okay. A question for both of you, and Jamal, maybe you can start us off in the world of the practical. So obviously we get a sense of what we're looking at here as far as sort of the moving parts. Here we are at the top of the range that this thing has been in basically all month long. What are they going to tell us here that's going to mean anything? And does the risk reward make any sense to actually do anything with this?
Well, it's fascinating. I mean, the options front, you see there's about a 6% option implied expected move, right? And that's actually a little bit lower than what we've seen historically. Like over the last 12 quarters, I think it's been about 7.7%. I mean, it's interesting at a time where, God, I mean, the whole zeitgeist is about AI, right? Like, I don't know about you guys, but I don't know that there's many conversations that I have these days where somebody doesn't mention AI or somebody doesn't mention ChatGPT or something along those lines.
Sure.
And I mean, hell, I was at a baseball game this weekend with my grandmother, my mother-in-law. I shouldn't confuse them. God, I'm really in trouble. She mentioned it
there real quick. Yeah. Let's hope nobody's watching.
She mentioned it like 3 different times, right? And so, I mean, it's my kid's grandmother. That's why, grandmother for mother-in-law. Yeah, sorry. It's mentioned a lot. And obviously, this is priority number one. This is the main stock in which we express that opinion for AI more recently. But it's interesting that there's not this huge expected move given where we are right now, right? You're hearing things like Sam Altman say that AI is a bubble. That's interesting rhetoric coming from a guy like that. But in the sense of how much is talked about, might be a bubble. But in the sense of our stock market that we know and we live in, I don't think so. Because, I was having a discussion today about what times were like during the dot-com bubble. And for what and again, I wasn't trading at that time. I chose to go to grad school. I think I was a dumb idea. But what I remember about that time is stocks used to move anywhere from 5 to 20% on any given day in either direction. And we're not seeing that at all from names like this, from names like Apple, from names like Amazon. We're not seeing from Meta. We're not seeing those type of moves. So I don't think it's a bubble, but I think it's also, I think the big thing about this stock for earnings is going to be the China situation. I mean, essentially they're having to deal, they're in the middle in the crosshairs between the two of them, like you said, with the H2O chip, and China is not necessarily possibly accepting those chips because they're worried about the tech in it. And the U.S. wants to give, is down to give more, but are they going to continue to give them more? Like that's the area where we are right now. And then how many tariffs are going to be attached to that overall? And again, Nvidia said that they're willing to give up 15% of their revenue to any sales in China. But you know, it would seem at some point the government is trying to take some type of investment from this, as they seem to be doing with a bunch of different stocks these days. So I don't know. I personally am not playing it. I already have a Nasdaq call spread. I think that's exposure enough. I mean, obviously, you know, Nvidia is not only the biggest stock, but it's a large part of the Nasdaq. I think there's a lot of other ways you can play it. There's the SMHs of the world that you can play. You can play AMD. Again, you're not playing it for vol crush because there's really not a whole lot of vol bid to it right now. So why would you be selling any vol in Nvidia? More than anything, if you're playing it, you're going to be playing it for the move. And I think it's probably a little easier to express those opinions than some of the offshoots. I think CoreWeave is another one of those names that you could play against it. Obviously, that's going to probably have an effect from it. But, you know, this is one of those times where I think this is, obviously, it's an important earnings. But I don't really have much of an opinion on the move that I expect. I usually do. Like I typically play names for moves for earnings, and I usually play, you know, upside for the most part. It's not that I don't think this has more upside. It's just that I don't know. I don't see it being a big move. I think it could end up being kind of quiet. But I also thought Friday was going to be quiet, so who's going to listen to me?
So this is actually, I was doing this sort of macro tourist in Stocksland thing today as I was looking at what this might be, and I thought it was really interesting. I mean, obviously, when we just looked at Nvidia, it was kind of near the top of its range. The Nasdaq, as a kind of broader benchmark, still very much inside of where we had first. Oh, good rate cuts. That was the CPI report, but not enough there to convince everyone. So for a few days there, we drift. We go down into Powell. Powell gives everybody or at least what they read as a green light. We're at 89% chance for a September rate cut on Fed funds futures here. So, okay, la-di-da, concerns diffused. We still can't get attack them. And if we look at the S&P, it's even stronger here, although, of course, we're still stuck. But for all of the past couple of days, tech seems kind of heavy. And when you look at the reporting here, so we start with the MAG's reporting on the 23rd of July, if I recall correctly. So that's right around here. So there it is. We see it. But then it's kind of quiet. We get Meta and Microsoft here. It's kind of a letdown. We get, and all of these companies are beating estimates. We get Apple and Amazon the following day. Not a whole lot here going on. And if we remember, Meta especially beat by a mile here and had a huge 12% day. Still can't make hay of it in the overall markets. And it makes me think that, I mean, at this point, all of the MAGs but NVIDIA has reported. All of them have beat except Tesla, which met on EPS but beat on revenue. And we haven't really gone anywhere in the immediate sort of reaction function. I mean, even if we look at this MAG's ETF here, here is those days where we start the mags reporting cycle with Alphabet and Tesla. That's the 23rd. Markets powered higher there, but it wasn't for these reasons. These names were stuck. There's the next batch of earnings. It's a fizzle. So I look at this almost from a kind of macro lens and go, well, these are obviously huge names. They hold tremendous amount of market cap. They're going to move the indexes. That's going to be an indicator on overall risk sentiment, but they haven't really been anything that's moved the needle, even when they beat and even when the individual stocks surge. So if the AI story is tired here from a sentiment perspective, like, okay, cool, we know the great and powerful future is coming. Lots of capex is being spent. Grandmothers at baseball games are talking about it. It's the hotness. Got it. Okay. The Fed's going to cut rates. We heard from Powell. Cool. It's on. There's a, at least right up front. Okay, it's coming. Those chances have only increased. Are these markets just tired? Have we hit a sentiment extreme? Because it seems like we're running out of good news. And the market is getting everything it wants to get, and it really isn't going anywhere. The last major moves we've had here for the S&P, here's that CPI report, here's Powell. We haven't really gone anywhere since basically the beginning of the month. We're kind of stuck at these extremes. What's the possibility that NVIDIA comes out, has a perfectly decent report, $1 a share is expected on EPS, right on the line. Let's say they deliver a little bit over. They beat by 9% last time. They've been beating in the single digits, but in the high single digits. It's not like the days when they were beating by 18%, 25%. They're beating by 4, 5, 9%. They'll beat, and then the market goes, okay, well, that's all the event risk in front of me. I don't have anything else to stand on, and we just fade because we're out of juice. Are we at an extreme here?
I think what you said is like, yeah, the market has everything it wants, and we have made a higher low here, but yet we're unable to clear into new highs right now.
Mm-hmm. Yeah.
And that's despite getting some clarity on rate cuts coming in September. That's what the market has been focusing on alongside this AI narrative. So yeah, after NVIDIA, you'd want to see them do well. Perhaps it could give us the next leg up. But like you said, it's also an event out of the way. If it doesn't generate enough enthusiasm, maybe all this long positioning over the past couple months, some of it gets unwound, some profit taking, and maybe we have to go on to test the lows from early August. I mean, that's something that's certainly possible. I'm kind of looking at playing, tech has, kind of lagged. You've seen some rotation into things like financials and stuff like that. XLF has went on to make, I think it closed at a record high today. But things like what I'm looking at playing is catch-up trades and things that have been lagging now. Because the enthusiasm in a lot of these leaders has waned, but the market is still, broadly speaking, it's still bullish. So maybe something like regional banks are a thing to play on the catch-up trade, among other things. So I've been looking at trying to gain exposure to some of these segments that have kind of underperformed tech for the first half of the year.
Should have known.
There's definitely something here in the regional banks. to your point, Thomas.
I should have known it took a little longer than I thought, but 20 minutes in before you came with the bearish thesis, I should have known that it was coming. I mean, I knew it was going to come. I just didn't know exactly when. You know,
it sneaks up on you.
you
know it's coming, but you don't know the angle.
I agree with you to the degree that the AI story is a little exhausted. I think that's why the volatility isn't real crazy heading into the earnings. That's probably a good thing. I mean, it's not going to have some 50-point move. At least that's not what's expected. Who knows what they say, right? But just from just looking at it and looking at the options, like it's not predicting any crazy move. And I think there's something to be said. The story is probably a little bit exhausted. Everything is mentioning it right now. Everything has it. MDB just came out with earnings. Apparently, they mentioned AI. I swung and missed on that one. I did a put calendar instead of a call calendar, which I almost always do. That's the thing. I think is the story's a little tired. Does that potentially mean some pullback? I think it's possible, but again, I think pullback is different than correction, right? And so,
sure.
I think you bring up a good point about financials. I actually was looking at that recently, kind of the ratio to financials to tech, and it's bigger than we've seen in the past 20 years. And it probably is, maybe some time for some financials to sort of lead a little bit. If you want a healthy market, that's what we need, right? Like you can't have all tech. It can't be the top 5 names always being the main drivers of the market. It's got to be some other stuff, the Goldmans and the JP Morgans. Quite frankly, they're just not that interesting, though. I mean,
trading wise, they're not.
I mean, they're not. And even in what they're doing, like they're still doing the same old stuff. I don't think they're not reinventing the wheel. They're not doing anything that much different. They're still, those banks that I mentioned, I mean, they still have bond desks. They still have these other areas that they make money. They still rely on consumers, et cetera. Like, this is the interesting thing. When people come to the markets and they want to buy something that's new and interesting and moving the needle, this is where they go. They go to the AMDs of the world. Look at how NVIDIAs of the world. Look how AMD has kind of reinvented itself, and it's up there. Intel is playing catch up amongst everybody somehow or another. I think the government's going to find a way to make that work somehow. They always seem to. So this is the area, I guess, for now. But sure, there's probably a little bit too many people in there. It's a little crowded trade for sure.
Yeah, I mean, just looking at the performance for XLF versus XLK, I mean, this is a one-way bet here. So very clearly going all the way back, I mean, essentially, let's call it early April, financials underperform with the appearance of, and this is going to be a technical term, a sinking rock. So as we look at that, I think, yeah, I mean, if there was going to be some rotation, this would be sort of a reasonable thing to look at, if only because it looks like whatever the slope of this was seems to have started to even out a little. And maybe we're getting a little bit of anchoring here, essentially since the beginning of August. I'm sort of taken to the idea that this is a very macro kind of landscape and that it's going to come down to something that basically moves the needle on everything or doesn't. We've been talking a lot about essentially where we are in the sort of positioning space, and we see that shorts in the futures market, just looking at the Commitment of Traders report, they've been building when you look at ES futures and Q futures, and you look at this and you go, okay, well, is this speculative or is it hedging against a cash position? Because obviously the market is massively long the cash equities, or we wouldn't be where we are on these indexes. So are people opportunistically hedging in the futures, or is the build in this exposure just speculative bets that this top is going to be the top or it's not. In my mind, it while it wouldn't qualify as hedging in the sense that it's not literally hedging underlying exposure to the index, it's hedging in the sense that obviously the market is really short the futures, probably because they're really long the individual names, just across portfolios. And so that they're starting to hedge then at such a massive level. I mean, we're just to give you guys a sense, as of the latest numbers here, we're hovering at the most net short for, let's say, the S&P 500 since the beginning of 2024. Now, back then, did that kind of build coincide with a pullback? A little bit. Not anything that ultimately derailed anything. A little bit of a wiggle lower. It starts around April of that year, and we get a little growth scare as we go into this idea that maybe we'll have another round of rate cuts, and of course the Fed doesn't end up delivering on it until September. But it is interesting to see kind of the professional investing realm look at this and go, we need to be hedging here. This is looking like it's frothy. And so as we sort of go down the list, it makes me think, okay, maybe we don't have anything earth-shattering, but it does look like there is maybe now less ammunition to give these markets fodder for a rally, or even if there is ammunition, the markets seem less responsive to it. They're kind of yawning at the Fed. They're kind of yawning at these earnings. It makes me wonder if you don't just get a regular NVIDIA report, a regular set of PCE numbers for inflation at the end of the week, and the market goes, okay, well, what have you done for me lately? Which part of this haven't I baked in already? And then we really see what the wherewithal here is. Let's take a look at, while we're on the subject here, what's going on with some of these cross assets. Looking at the bonds, this is like, I guess this is what one should want out of a bonds position, I suppose, because it's moving slowly, but in a direction. Do you guys have any interest here? I have been sort of stubbornly long and looking at this very painful creep higher and saying, well, these are bonds. They're not supposed to be fast. This is how this is supposed to work, an inch at a time. Do you guys have any exposure here or looking at this at all?
I don't have exposure. I took my ZN long off last week. I've been out of ZB for 2 weeks. I mean, we're kind of holding this loose trend line since May. You know, I do expect us to gradually creep higher, you know, through the next couple months. But like you said, it's not going to be all at once. And then we get, you know, these curveballs like the Lisa Cook thing, you know. So it's, you know, and then another possible wild card is the job numbers next week. Are the markets going to have confidence? What kind of number is going to come out? Is it going to be drastically different from the trend of the past few months? If it is, is the market more skeptical of that now with the new MBS statistician? I mean, I don't know, but it'll be interesting to see how those numbers play out next Friday and how the market digests it.
You know, ZB exposure for me. I mean, look, I get it. I mean, like you said, it's this is what bonds are supposed to do. This is not what we have seen over the last 2 years, right? Like bonds were actually pretty active. Things were happening. The will they, won't they on whether cuts are coming, right? Like
Mhm.
it's really leading to a lot more movement in bonds, and that's why I was playing it. And I did fairly well. I mean, more recently, not like the last 2 years. Like most times, it was just like not really working well. The only trades I really did well on were the selling vol ones if they popped a little bit. And even that is a tough one because, again, a bond vol pop, you guys know, is like 13 versus like 10, right?
Right.
Like that's just kind of how it goes. 3 ticks versus something, on the order of a tech name or something like that. So I kind of stopped with bonds it looks like my last position was on the 31st. I have eyed it up a couple of times when it's gotten to 113 ZB. And I'm like, yeah, this is it. Let's bounce. It's going to bounce to 116. And then I just caught myself because exactly what Ilya said. Like it is a slow trade. It has been really slow more recently, and it seems to have slowed down. And for that reason, I'm just kind of, I feel like one of the hallmarks of this year has been things move adversely. They move down to a level where everybody gets scared. That's probably the good level to buy, and then they bounce back, and then you're able to sort of that's been the trade. And that's actually how I made the most money in bonds this year at one point when they went down to 112s, almost 111s, basically
Yep.
111s. That's when I made the most money, and it bounced, and I've been out since. And I think that's what I'm waiting for again. Unless it does that, I'm just not going to be as interested. You know, I gotta preserve my sanity, like you said.
I've got a ton of duration in this thing, so I'm doing this via a TLT call vertical because obviously the vol got so ridiculously cheap when you got to 111, 112. Just I mean, you might as well just buy calls because that's where you're going to get the best risk reward. Vol is so cheap you can lock in easy 2 to 1 risk reward with your risk defined. So what I've been doing is essentially saying, okay, you know what, I need to put a bunch more duration in these positions, and on the one hand, dilute my exposure to the delta because you never know. The president says something, the markets don't like a Fed speaker. Suddenly, everybody's concerned about rate cuts, even though the September move has had a likelihood of, let's say, over 60% for months. So suddenly, oh no, let's get cold feet. So I've just wanted to let the markets be choppy and give them time to be a bond market and attempt to kind of look at it that way. So I've been sitting in these positions for ages. Um, at this point, I think I've been sitting in this TLT position for 48 days, and I've still got just a little under a month to expiry. So I'm just sitting and waiting because eventually this clawing higher, one would think, is going to continue.
Do you guys think that this Lisa Cook thing is some kite flying to test the waters on if he could do this, then maybe there's enough capital, political capital, to move it through to where he can do it to Powell? Because he seems to not have let go of the Powell thing, even though
No,
he's gone through phases of backing off and then putting pressure on again. Is the Lisa Cook thing kite flying?
Yeah,
I
I
sort
mean,
of get the sense.
I think so.
Yeah.
I think so for sure. I think it's one of those situations where he's trying to get a majority, right, to eventually be able to influence rates in any way that he wants. Look, politics aside, just the man, there's plenty of data. If you look back, if you look at documentaries, he's operated this way. He owned the USFL at one point in time, similar type of things that have happened. So this is just kind of, how he operates. And I think this is definitely a situation where he's trying to get a majority to influence and do what he wants. Hell, I wish I could do that. I wish I could fire somebody to get a majority of the things that I want. It doesn't work that way for me, but I think that's exactly what's happening.
Yeah, I mean, you sort of get to this thought process here, like, okay, let's say you have cause or you think you have cause, and this is why I think everybody's resisting Lisa Cook resigning. If she resigns, well, then maybe there's fire where there is alleged smoke. And then you get to turn around and go, well, hey there, Jay, aren't you supposed to be her boss? aren't you supposed to be in charge of this? How did you let this slip through? And it opens up a line of attack. So I think they're trying to resist having her resign and trying to say like, look, this is baseless, and we'll see if they can bat that away. But if she goes, then it becomes, at least rhetorically, something to turn around and go, Jay, this happened on your watch and you're supposed to be in charge. So did you mean to overlook this? And then you start to have a conversation about all kinds of things. I mean, we certainly know the president is not one to shy away from lobbying allegations. So I think, are looking at something that's, part dress rehearsal, part a preamble, even just to sort of get the screws turned. But you sort of wonder if this is like Zelensky in the White House, take one, take two. So we do have this September rate cut coming. So if we manage to drag the Lisa Cook story long enough for the rate cut to occur, it's like, oh, well, he wore a suit this time and said thank you, so now we're friends. You sort of wonder if you get that kind of dynamic here, where Powell cuts, the president's like, oh, well, I'm happy with him now, it's about time. Yeah, and then the whole thing just goes away because the shiny ball is a different bogey.
Yeah, I mean, I see several possible outcomes to this. I mean, there's probably numerous, but at what point trading it do we consider that it could really impact the market? I mean, you've seen it, the Lisa Cook thing, a little bit in the dollar, but you haven't seen it implicate in financial markets, equities, or anything else really to any extent. And it makes sense to me, but as a trader, do you even consider this or this possible path we're going down? Because there's more, interference, I guess you could say, like the BLS commissioner, things like that. At what point do the markets start to look at it more?
I think you've just hit the nail on the head, actually. Probably the biggest thing in my mind, and Jamal, jump in here and tell me I'm a disgruntled bear and I am doomed to be disappointed by the power of the AI supernova, as Dylan might say. But I look at this and I say, well, the dollar hasn't fallen since the beginning of July. It's obviously had an absolutely awful first half of the year for all the reasons you might imagine. There was a growth scare initially around the tariffs, so the market started to bake in more easing. There was the Liberation Day, the U.S. will cut off its nose to spite its face moment, where it looked for a second like the U.S. forgot that the dollar as a global trading currency is a huge advantage, because then we get basically borrower of perfect FICO everywhere, because nobody has an interest in us defaulting because we're the global currency of commerce. So if we default, there is no global currency of commerce, and that commerce stops. And of course, nobody has a vested interest in that, not even North Korea. So when you look at something like this and you go, okay, wait, are they really going to so clamp down on trade that demand for dollars so diminishes that they're going to knock themselves off their own perch at the top of the global financial system? And then once the markets got quote unquote yippee, and bonds, stocks, and the dollar were falling in tandem, everybody kind of backed off. And suddenly we got 90-day pauses and whoa, take it easy. No, we're not replacing Powell. Everybody relax. Once we saw that it was sort of that the administration was responsive to market discipline in a sense, we see the dollar stall, and it stopped falling even as we get this confirmation of rate cuts, which you think would be dollar bearish, all of this increasing sort of repositioning there. So I look at this and I go, okay, so if the dollar has stopped falling, then we're no longer worried that it's going to cede its status, that it's going to not be the cash of last resort if there is risk aversion, all of these things. So do we care that the president might make an inroad at the Fed? Or have we decided that actually, if the president were to do something that smelled like interference, the bond markets would get yippy again and everybody would get put back in a box? So this dollar stabilizing here seems to suggest to me that the markets are kind of over this. That they've kind of decided, you know what, if they do something wacky, we'll just sink the bond market and they'll go, wait a minute, but we want lower rates. It was like, well, yeah, but the rates are surging here because you keep putting term premium into the market because you're being erratic. Oh, okay, sorry. And back up. So I get the sense that maybe we're, again, at some sort of an inflection here.
I think you're right. I think inflection is definitely the word to use, especially the way that the dollar has been selling off for most of the year, like you said. And we've heard so much about all the different shorts of the dollar, you know, which honestly was made, which got really appealing to me at the beginning of July. I was like, this is a little bit too much.
I had a great time shorting it. Dude, the first 6
yeah, I
months
bet you did. Yeah.
I mean, for all my fighting of the stock market, this is the trade that papered over those sins.
I think this is setting up to be another interesting trade. And again, I was getting long the dollar until Friday happened, and I closed out. You know, I was short, long a put spread, short delta, long a put spread in the euro, and I closed it out because again, that just seemed like it was the death knell for any possible chance of the dollar bouncing. But like you said, it seems to have stabilized, and I feel like we could be in for another narrative shift at some point with the dollar here. And maybe at some point, those who've been short the dollar for all this time, riding it into the ground, eventually squeeze. That's just kind of the market that we've always been in, right? You can only, you know, be long something for long enough, i.e. the Nvidias of the world, or you could be short something for short enough. As soon as everybody's kind of crowded in the trade, there's going to be some movement at some point in time. So it might be worth examining the idea of a long dollar again, because I could just possibly see it happening.
Yeah, and to your point, Thomas, I mean, obviously, it's not good when fiscal authorities meddle and attempt to put themselves at the levers for monetary policy. It doesn't take a very deep Googling to go, well, every single time since the beginning of time, going back to ancient China, that humanity has attempted a fiat currency system. It's failed every time but this recent iteration. And the reason is independent central banks. The printing of money has been taken away from politicians or kings or whoever happens to be interested in cheap credit at any given moment in time and can execute that by decree. So when we took away that power from those authorities is how we found ourselves now in a world where fiat is relatively stable, it works, and it's enabled, obviously, a tremendous surge of economic growth and economic prosperity for decades because credit has become so much more fungible and easy to pass around, easy to deploy, less risky to manage, et cetera, et cetera, et cetera. I mean, all of this has been a tremendously good thing. And obviously, when you threaten that, that's a tremendously bad thing. But the stabilizing of the dollar here seems to tell me maybe the market has kind of looked at the administration and said, yeah, we could tighten the screws on them to disabuse them of any kind of notions like that if push came to shove. And they're responsive. So I don't think it's that we shouldn't care about the Lisa Cook thing. I think the markets are telling us, yeah, but. And it makes me think that in this kind of an environment, especially if we have stocks stalling a little bit here and the dollar refuses to fall, even when the Fed ostensibly gives them something dovish. I mean, we saw. I mean, the euro is a great example here. Here's Powell. Here's the day after. Didn't exactly stick. So, and I mean, if you go currency by currency, in some places it's stuck more than others. But I mean, even just the yen here. There's Powell, and we're back. And this is probably the most kind of nakedly yields sensitive one of all of them. So in my mind, you sort of start to get to a place, well, if stocks were to be exhausted, if there were to be some kind of a sentiment shift, one of the key beneficiaries might well be the dollar, just because you would get a risk on, risk off dynamic. And if the dollar doesn't have the baggage of, oh my God, 50-year, 60-year regime change, because the U.S. has decided it no longer wants the global reserve currency, then that money goes there. And the dollar has a rally not because of yields, but just because of a risk-off sweep.
Yeah, and I think, I was thinking how to get long the dollar. I think shorting the euro is probably the thing to do. And if the euro was only based on yields, you'd probably expect the euro to continue to drift higher. But like you said, it's going to be likely on a safe haven, risk on type event that you're going to get some price action back into the dollar. Mm-hmm. So I think that's a long dollar position is probably one of the ways I would hedge against, a potential downfall in the equity market right now. And I think doing it through the euro, and I also don't like this euro chart that much right now. So I think shorting the euro is probably the thing to do here if you expect some turmoil or volatility to come into the equity market.
Yeah, I'm a little annoyed that it shook me out of the trade on Friday, honestly, but I'm going to revisit it. And you're right. This chart doesn't really look that good. It's kind of like floating. It's hanging in there. It's just needs a little push. We'll see what happens.
Yeah, it seems like we have this like ugly looking series of lower highs and lower lows, but they are lower highs and lower lows. So you get this sense that there is a kind of regime change here from that explosive rally that we saw, even just with the naked eye, without being any kind of a technician, just looking at it with a crayon and going, seems to be rounding out something here. So let's get to the hands-on and the practical. Jamal, how are you putting this on if you're putting it on? I mean, we have IV rank of 37, so it's not like vol is cheap.
Yeah. It's not cheap, but I don't mind taking directional swings, even if I was a little bit high in the currencies, because again, overall the implied vol is on a relative basis, it's fairly low, right? Like, I mean, it's 7 implied vol right now. Like, if it does come in, it might come into what, 5.5? You know what I mean? So yeah. I'm not going to get killed like that. I'm really looking for the convexity trade and looking for the move to the downside. So I would go out to Nove. I'd buy the 117, 115 put spread. That seems to be fine. I like that risk reward. It's a little like it's about 1 to make 1.5 or so, right? Like I can live with that. And again, I think the way I get beat the most is if I'm just wrong and the dollar continues to fall. And I feel like there's more problems with that, with the dollar continuing to fall overall. To Thomas's point, I mean, that's one of the ways that we have hedged the market, but it's been really weird at times this year, right? We've seen big up days in the dollar and big up days in the market. Mm-hmm. But generally, over time, we've mostly seen that inverse relationship. And so if the dollar does, continue to fall, I'm long equities. I'll be fine with that. But this is definitely one of the plays I got to revisit. Because I allowed the market to shake me out of it on Friday. It looked like it was about to be on, man. I mean, seriously, you guys saw that. Like, it looked like not only were we going to have another big day up on Monday, but it seemed like this is it. We're headed for rate cuts and just price them in. And honestly, we really haven't seen that follow through in the dollar nor in bonds.
No. And that's sort of my spider sense is tingling for this reason. Like I look at it and I go, okay, so you got CPI and then a flat line. Now you got Powell, and then a flat line. It's almost like we're getting told things we already know, so all we're really taking away is the uncertainty. So there's a little one day, ooh, yay, it's the good outcome and not the bad outcome. So Powell didn't rug pull the markets, woo-ha. And then the uncertainty comes out of the market. It's good for a day, and then it's like, well, but what didn't we know about that? That was already priced in. We just needed to be told that speculation is reality. Okay, cool. Next. And it feels like you're kind of running on fumes. The 6E contract is, in all fairness, a little large for me. So what I've been doing is just using the futures, the micro futures, outright. And of course, spot as well. So when I've been looking at this, I've just been looking at M6E and just holding outright shorts. In fact, you can actually see them on the screen.
Yeah, it's pretty cheap.
Yeah, so I basically started getting in right at the top of this thing, right as it started, and I've been sitting on it this whole time. I've probably been sitting on it for almost a month now, just basically saying, okay, this thing, whatever it's doing, the risk reward has become better to be short. If you're wrong fast because you take out these near-term highs. If you're right, you're asymmetrically right because you just had a horrible 6 months for the dollar to start. And my boat's loaded. I'm short the pound, the euro, the Aussie, the yen, the Swiss franc, the Canadian dollar. I'm short it all.
Thai baht.
And
yeah, right. He's short every currency in the world.
I haven't quite become so confident as to have an opinion on the Thai.
You know, I just thought about this. I know I said November, but actually I might go out to January. It's actually a similar risk reward. And I think I'm going to end up going out to January because I need some duration on this. Honestly.
Yeah, I think duration totally makes sense. And that's the nice thing about just taking outright position in a micro contract because you could just roll it if you need to and you can wait because eventually, you know, as long as you're not any crazy length, you know, tying up your capital, that makes sense. And, you know, there is like the long-term plays for the dollar going down with people saying it's getting dethroned right now and this is the early phase. But for that to happen right now, there would need to be a replacement for the dollar. The euro can't do it. There's not a unified fiscal landscape in the EU.
For sure.
The yen can't do it. The economy of Japan is just not big enough. So it's the dollar, even if you think it's going to get dethroned, it's going to happen over decades and not even over years. That would be far too short.
Absolutely. I think that's spot on. Like, show me a currency with the liquidity and the market depth that can replace the dollar. I'll wait. I'll probably grow a beard down to my knees while I'm waiting because there's just not an alternative. It doesn't exist. But the only kind of gnawing thing at the back of my head, and I think that's why the markets kind of freaked out in April and they were happy to see the administration responsive, is, well, is there an orderly replacement? No. But is chaos, uncertainty, and mayhem always an option? Yes. And so there's been instances, obviously, in human history where we've done things in spite of our best interest and defaulted not to an orderly transition from one regime to another, but to death, pain, and mayhem, both literally and financially. So I thought the markets were very concerned in April when, you know, the president came out with the foam board. I think everything was cool until the foam board came out. when he came out and said, look, okay, there's going to be a baseline tariff, there's a floor of 10%, and everybody said, a flat number, we can work with that. And then the foam board came out and everybody freaked out.
It was a wrap.
So soon as that foam board was out and there was all kinds of different rates on it, everybody said, oh my God, okay, they want to kill their own golden goose. and everything went crazy. So I think the markets needed to know that's not what's going on. They needed to know that that the administration is willing to learn, willing to put the foam board down, and willing to understand. You don't kill the dollar. That would be just completely counterproductive to everything they want to achieve. For one thing, rates would surge, and that's not what they want at all. So it seems like now that we've kind of gotten back to a sort of uneasy status quo, if there is risk aversion, if there is some kind of a shift in thinking here on risk, probably the most interesting trade on the board is the dollar, rather than attempting to fight a stock market which sort of preternaturally hates going down. FX market is a two-way market, and I'd be remiss not to mention that if you really want to get flexible with the management of size in these positions, there is always spot. And here, you can take a trade on all of the same sort of futures that you would be looking at. Obviously, there's futures equivalents to all of these. I've been, for example, doing the yen on the spot side because there are no options for a micro 6J contract that's liquid and usable. And 6J is big. The recent futures we've added on the franc, on the kiwi, we don't have micros of that, and they're not liquid. But if you wanted to take those bets, sometimes they're more attractive than elsewhere. Spot is your friend, and you can manage your exposure the same way as you would being outright long or short the futures, only you don't have to worry about expiration because it rolls automatically, and the size is much more manageable. You can get it down to something really small as a part of your overall exposure.
Yeah, I mean, the size component for spot is the biggest advantage. I think you can tailor nearly any size you want, so that's a big plus, especially if you have small account.
I thought I was clever at the beginning of last year. I thought I had a yen turn on my hands and got just absolutely shredded in 6J futures. Macro is terrible at timing. So my approach is always take a small position, risk defined, needle the market a little bit. If the move's wrong, take it off. Maybe do that 5-6 times before the move actually goes. But when it's a macro move, it's big. So that one winner washes 3-4 small losers, and you end up in the right side of the P&L column. But if you can't take those small positions, if they can't be risk defined, if they're going to be big 6J contracts, they'll crack your skull in if you're not careful. So I've definitely moved in places where you don't have liquid micro futures. I live in spot land.
That is a good T-shirt. Macro is terrible at timing. Put it on T-shirt.
Terrible at timing. Terrible at timing. I will be the first to tell you. With that, gentlemen, overtime is out of time. I might get that tattooed on my forehead one of these days. Thank you, gentlemen, for joining us. That was awesome. Perfect vibes before these NVIDIA earnings. Don't go anywhere, everyone. I'll be right back with macro money just after a short break. And, of course, overtime is back tomorrow with another new and interesting cast of characters. So definitely come and join us.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
My most controversial market opinion is it's probably more political.
What's your most controversial market opinion right now?
My most controversial market opinion is that I shouldn't be following Mike and Nick. Just kidding. Love you guys so much.
The hottest take of this market? I gotta think about that. I don't know. I do like to trade the leverage, but that's not controversial. I don't know what controversy means these days. Like, I don't know. I'm sitting on cash. Like, I'm still sitting on a lot of cash, and I think that's generally seen as like frowned upon, but like I'm still doing it. I know market's been bouncing back up. I know things have been looking clear, but no, trust issues.
I honestly don't know if I have one. I'll say the fact that I like to trade earnings or direction as opposed to vol.
My most controversial market opinion is it's probably more political than it is anything else. So, I would say that, unlike others, I think the current political environment in this country is dangerous for the long term.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs, Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Where is the follow through? That's the question that we're asking after explosive lead in for sentiment at the end of last week from Fed Chair Powell. We don't have as much on the calendar this week, but you'd think with that kind of vigor, the markets would have a built-in desire to keep the good times rolling, but that is not where we are. And so after another quiet day, we look ahead to consider here. As ever, this is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And what we're going to do here is take a look at what the price action has suggested as we move through this week and consider what we might look at next to get a little motion, because we certainly don't have that here. So let's first just remind ourselves briefly. This was how the markets behaved in the wake of Fed Chair Powell's speech at the Jackson Hole Symposium, where he ostensibly gave the green light to an interest rate cut in September and some variety of rate cut cycle to follow. S&P surges, NASDAQ surges, yields are down across the board, gold is up, the dollar gets whacked. We see the euro here up almost 1%. The yen does get up a full percentage point. Bitcoin, the risk sentiment on steroids of assets, that's up 4% here, a little bit more. So very, very clear cut. This is good for sentiment, the markets say. This is going to be rate cuts, the markets say. How lovely that Powell didn't rug pull the markets. There was certainly concern going in, as we discussed on the show yesterday, between August 12th, when the markets got that CPI report that they decided that they would like, despite some mixed cues, and decided this would be good enough for the Fed to start cutting rates, and the Powell speech. Everything else in between was either sideways or down, so there was some concern there. This was a good bit of relief for markets, clearly. Then we look at how we've been performing so far this week. Now, I took this snapshot of yesterday and today just a little bit before the close, so we've wiggled around a tad on these readouts since then, but only a little bit. There's not been any major moves to change the landscape here into the close in a material way. So as we look at this, consider we're soggy on stocks in the best of cases. NASDAQ erring lower, but basically flat. S&P down a little bit. The situation in yields a little bit soggier, the 10-year, so the long end of the curve stable. The front end still coming in a bit, but that doesn't seem to be influencing anything from a macro sense. Gold is up a touch, perhaps mirroring what we're seeing in the 2-year, but perhaps most eye-catching, Bitcoin is down sharply, so sentiment is weakened clearly, and the dollar is launching a spirited recovery against its major counterparts. It's almost fully erased its Powell Day loss against the euro. Euro down just about 0.7, if we round it off, of a percent so far this week. The yen down almost 0.4%, and that's probably the most nakedly rates sensitive of the major currencies against the dollar. So this is not a market that's willing to say that we're going to run with Friday's narrative, risk on, dovish speculation on maximum, ride up stocks, ride up gold in earnest, sell the dollar. That is not the dynamic that's emerging here, and certainly we can see gold is a little bit up. The 2-year rate that is the most sensitive to immediate policy expectations, that's a little bit lower this week, so we're seeing a little bit of continuation there, but sentiment is clearly struggling. The dollar is clearly holding. And this is not for lack of conviction after Powell's speech in this rate cut narrative. This is comparing the probabilities of that cut, the current rate, of course, the current rate range, 425 to 450 basis points. That's this right here. And we can see now we're hovering right around 89% chance that we're going to take a step lower from this range by 25 basis points and have a rate cut. So let's consider how this has behaved recently. So a week ago, we were north of 80, but a little bit lighter. Yesterday, we were a little bit lighter than that, and we've only seen more conviction. So it's not as if there's been a meaningful change in the likelihood that September will see a cut. We were in the upper 80s just after CPI and even approaching 100% probability there. The readout that we have here doesn't have those data points. The furthest back we have is a month ago, and that's giving us still north of 60% on the likelihood of a cut. And we can see that over the course of that month, the likelihood has only increased and has been relatively stable before Powell. This is the 19th here, and after. That's just the beginning of this week and today. So looking at all of this together, clearly it seems like the markets have the dovish directionality that they want. In fact, they've had it relatively convincingly before the Fed chair spoke, and they haven't really gone very far thereafter. But the follow-through on what this might have been, an extrapolation of the good vibes for risk sentiment, that's clearly not occurring. Moreover, the actual outlook for the view through the rest of this year and for next year has been shifting in familiar patterns. We still are locked in to the 50 basis points that we've been circling around for this year, going all the way back to May. And that lines up with the Fed's own outlook that they've been holding on to since December of last year. So pretty baseline there. As for next year, we can see that view has only grown increasingly dovish. And so now we're looking at 5 cuts between now and the end of next year. We're looking at least 2 of them here. We're looking at least 3 now fully discounted for next year. This is where perhaps the disparity is, and perhaps why the markets are not following through immediately, because what we're seeing is that the markets would have to have the Fed adjust a good long way in terms of its forecasting to line up with this much more dovish view. In June, the Fed had only 1 cut on the menu for 2026. And of course, when they meet on September 17th, not only are we going to get now the widely expected reduction, we're also going to get a new summary of economic projections, where the Fed is going to say how many more rate cuts it intends to do thereafter. Now, it's running out of calendar to do that second cut. There are meetings left after September in October and December. So if the Fed sticks with the 50 basis points for this year, then as widely expected, one of those meetings is going to give you that second cut. But the real question will be 2026, where there is a big disconnect. And that hasn't changed. So it doesn't seem like there is an easy path for dovish sentiment to extrapolate here because the markets have already gone where this year is benchmarked and are already way ahead of the Fed as far as next year is concerned. And so this then shifts our focus, absent any kind of major U.S. economic data until the incoming PCE report later in the week, which we will tackle here tomorrow. The thing that's left on the calendar are earnings from NVIDIA. And because there is so much market cap locked up in these Magnificent Seven names after tech's heroic outperformance and the tremendous power of this AI narrative that we've witnessed around the markets, this becomes not just one company reporting earnings. This becomes something that can have an impact on overall sentiment just because of its weight in driving the indexes. And if there is a shift in sentiment, well, then that might extrapolate across the major markets and the major asset classes outside of equities as well, and start to impact gold and the dollar and interest rates and so forth. And so I thought that it would be helpful outside of sort of the usual stock perspective on the financials and the company's prospects and its narrative to look at this as a kind of macro tourist in stocks land and consider it from the perspective of a macro catalyst for sentiment writ large. And there's an interesting sort of considerations that starts to line up. So obviously here we have the earnings for these Magnificent Seven companies that are at the center of this tech-driven story. 6 of them have already reported. We see positive surprises all around, but for Tesla's EPS, which hits right on the nose here. Otherwise, Alphabet, Meta, Microsoft, Apple, Amazon, they all report better than expected results. Meta kind of famously beats by a long mile here. And of course, on the day of, this was a 12% odd rally for the stock itself. We can see the other ones are relatively close, pretty decent beat for Amazon, but otherwise we're pretty close to forecasts and just enough that the company can pat itself on the back and say, well, we did a good job of under-promising and over-delivering. We gave the markets guidance that we could then top. So all's well that ends well. Next report. And of course, here's NVIDIA. The expectation is we're going to come in at $1 EPS per share on revenue of $45.81 billion. And that'll be coming at us after the close tomorrow and give us a sense for where we're going for the rest of the week. Maybe if this ends up having the gravitational pull of a company that is as large as it is. Of course, just look at market cap and you very easily see of this giant bunch, this is the largest. And so the weight of a big move here on the indexes would be significant. But let's consider how these have gone so far. This is the MAGS ETF that tracks the collective performance of the MAG 7 here. And we can see that while we've had these beats, even when they've been big beats, the overall response function here has been soggy at best. So here's Google and Tesla that start us off. Here's Meta and Microsoft. And they report after the close here. This is that big Meta beat. So you get this giant gap. But ultimately, the market's faded. And then when Apple and Amazon report, they keep fading. So we get these better than expected results, but they're not really giving the market anything to rally on. But wait, you might say, well, maybe the market was just waiting for all of these things to come out and then rallied thereafter. Well, not so fast. Here's the performance of that Mag 7 ETF relative to the Nasdaq and the S&P, and I've used the ETFs here, the Qs and SPY, to give us the most sort of comparable set of things to evaluate, and we can see that indeed SPY has outperformed a little bit recently. The Nasdaq was outperforming essentially until we got into the last few sessions here, going back into the middle of last week. And here we can see TEGs starting to lag a little bit, but on the whole, comparable performance here, up or down, give or take 1.5%. The MAGs are outperforming with a gain of almost 4.5%. But we can see that the view here seems to be less so Mag 7 specific and more so beta. So the underlying sentiment with a little bit of a kicker, because of course we don't have the dilution of an index in these names. These are just 7 stocks, and their volatility is going to be relatively higher than the indexes. And we can see where these moves begin. So again, going back here, we get through the earnings, then we get this move higher. That's this move here, which nicely coincides with the beginnings of repricing for Fed rate cuts in earnest. This right here is the implied rate into December's Fed funds futures contract, so essentially where rates are by the end of the year. And we can see here that we go and get more dovish exactly in the period that we get this upswing. So we get a level shift in rate cut expectations. We can see that an extra rate cut appears here. We go from 4.05 to about 3.85 here by the end of the year. So you get this dovish shift, and that's what seems to be propelling markets here. We can see we reach a crescendo on that, tellingly, on the 12th right here. That's where that CPI report comes out. So we get all this dovish speculation into CPI. Then the market gets soggy into Powell. We get Powell right here. Sentiment pops again, and we've stalled. So it doesn't appear like it's these names that are powering the move in MAGs. It's that stocks are up in general, and that they're up on Fed policy speculation, and when it runs out, they fizzle. So this, of course, starts raising an important question. Now, it is certainly compelling to look at the recent performance from NVIDIA and say, well, chances are they'll beat on the upside. They seem to be good at guiding accordingly. And while we're probably not going to get these heady beats like we had toward the end of 2023, the beginning of 2024, I mean, especially we can see here in 23, we get these fat double-digit beats and some even larger earlier in the year. We seem to have benchmarked these down to something more reasonable into the single digits, but the first quarter was by no means soggy at 9.89%. So maybe we get a smaller size beat as the markets re-benchmark this a little bit and end up somewhere in the vicinity of these 5% moves. But to expect this to beat would be the baseline, and indeed, if it beats by, let's say, only 2%, 3%, that might be in the realm of the disappointing. The bar is, let's say, somewhere between 5 and 10% of a beat would be sort of relative baseline, which is already something of a bar to clear. Moreover, if we look at these numbers from FactSet for how this second quarter reporting period has worked out so far, we can see an interesting sentiment shift. It would appear that when companies have positive earnings surprises, historically, they get a lift of 1%. In this cycle, only 0.4%. This is the 5-year average here in the gray. For negative surprises, we have an almost a more than doubling, as a matter of fact, of the historical sell-off that you'd get. And we can see here, of course, markets are even historically more responsive to downside surprises than upside surprises because stock markets are biased long. And so their status quo that's priced in is that things will be generally good and or better. Markets obviously know to expect companies to try to guide lower than beat relative to those expectations. And so, or guide on the soft side, we should say, not necessarily lower as in earnings going down, but guide modestly so they can beat. And so the response to that sort of baseline, considering it's essentially in the stew for how people look at stock markets, is relatively more modest than if the algorithm breaks and you do get a downside surprise and there's a larger move on the downside, 2.4%. But in this current cycle, we can see the punishment is more than double historical norms, down 5.5% on misses. Moreover, this entire ride up from April's Liberation Day panic lows has been met with increasingly negative speculative positioning in benchmark futures. In fact, we're at this point the most net short speculators net of hedgers since the beginning of 2024. Now, when we had a similar build out, only a small blip lower followed on the S&P. So this is not a thing unto itself. But what it does illustrate is that as we get back up into the highs here, and the higher we go, the more it seems like market participants want to hedge their cash exposure to equities through futures. So ostensibly, we couldn't be at these highs if the market was not massively long cash equities. But increasingly, as you go higher, the markets are seeking to defend that position by becoming increasingly net short in the futures market. So you put all this together and you get the sense, well, the market is punishing disappointments disproportionately hard relative to rewarding things that are optimistic. We haven't really had these positive results from the Mag 7s move the needle. Where the needle has moved, it has moved for Fed reasons, it would seem, here. And Fed reasons appear to be static and out of juice. And so the question then seems to necessarily appear, are we at some sort of a sentiment extreme? Have we run out of good news to impress the markets? Is everything priced in? And in that sense, you might be looking at the NVIDIA earnings as a buy the rumor, sell the fact, or even just a wait for the rumor, sell the fact sort of a situation where the market gets on the other side of event risk and says, well, this doesn't change anything for us this way or that. It's time to perhaps divest a bit and let these markets have a respite. And so these NVIDIA earnings may be more an inflection point for a sentiment extreme than anything of substance for the AI story or certainly NVIDIA itself as such. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after Overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and what may follow. I'm also writing for the news and insights portion of tastylive.com. and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
My most controversial market opinion is it's probably more political.
What's your most controversial market opinion right now?
My most controversial market opinion is that I shouldn't be following Mike and Nick. Just kidding. Love you guys so much.
The hottest take of this market? I gotta think about that. I don't know. I do like to trade the leverage, but that's not controversial. I don't know what controversy means these days. Like, I don't know. I'm sitting on cash. Like, I'm still sitting on a lot of cash, and I think that's generally seen as like frowned upon, but like I'm still doing it. I know market's been bouncing back up. I know things have been looking clear, but no, trust issues.
I honestly don't know if I have one. I'll say the fact that I like to trade earnings or direction as opposed to vol.
My most controversial market opinion is it's probably more political than it is anything else. So, I would say that, unlike others, I think the current political environment in this country is dangerous for the long term.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
What is going on, everybody, and welcome back to Risk of the Week. You're back with Gus and E. We got a couple risks of the week to put on, get caught up in all the craziness going on in the market over here. But before we do that, what's going on, everybody? Hope everybody's doing well. And Gus, how we feeling today?
Yeah, feeling good today. It was kind of a strange day. For me and for anybody in the market, we were down off open, and then we kind of gradually recovered through the rest of the day.
I know you got a couple solid earnings in there too that we're going to get
just
into.
think anytime we go red to green, it's a little bit strange, or the other way. It's like we usually like to use open as a resistance, not a
I feel you on that.
It's interesting. So
I like that.
Anyway, yeah. So when I first opened my brokerage platform this morning, I thought it wasn't going to be a great day in the markets, and by the time it closed, I was up large.
I know.
So feeling good.
I know your risk of the week is an interesting one. I'm curious to see what the audience is going to think about it. I like it. It's going pretty well so far too, but we'll get into that here in a little bit. Today is Tuesday. It's the beginning of the week. We have some more risks of the week that we want to put on. So we'll go ahead and just get into the slides for today and talk about some of these underlyings because it's a little different.
Yeah, you guys are about to hear about my incredibly meticulously researched trade that I've been putting together for 2 weeks here. We can go slides.
Yeah.
Okay. Risk of the week. For those unfamiliar, every week on Tuesdays, Errol and I both put on one high-risk, ideally short-dated position. Sometimes they're not so short-dated, but ideally it would be short-dated position.
Yeah.
So let's dive right in. My risk of the week this week is Okta. This trade has pretty much already come to fruition. I was playing the earnings call after market closed today. And yes, I was being sarcastic with my comments earlier. I put no effort into finding this trade, and it has just worked. Okta... Okay, here's my due diligence for real.
Okay.
They've beaten earnings.
It's a real stock.
Yeah, they've beaten earnings like the last 6 earnings calls in a row. 6, I don't know if it was 6 or 7. A lot of earnings calls in a row.
Right.
But perfectly, every single one, it goes gap up, gap down, gap up, gap down. It's been alternating regardless of what the actual numbers are relative to EPS and revenue estimates.
Mm-hmm.
The last time they took a gap down, they're kind of close to their lows of the year. And so I just took a chance that this time it would be a gap back up. And that's what we've gotten. I forgot to put my trade itself on here. I have a bullish put spread wherein I have the 93.94, so I needed Okta over 94 by the end of the week. 3 DTE, which does fit the short-dated constraint that we usually try to put on these. And it looks like it's going to work out for him. I'm not sure if I'll exit tomorrow morning or exactly how I'm going to choose to play it, but there'll be a lot of theta that eats into those overnight now, so we'll see.
I feel like this is like the epitome of some trades. Like sometimes the risk reward is in your favor. You're placing yourself in an environment where we're about to see some volatility. And you pretty much 100% capitalize on it. I mean, I already saw the position. It's working out really well. And it's just funny, those last couple bullet points, perhaps the most brain-dead trade ever, and then about 50 seconds of due diligence. I mean, if that's not a trader, I don't know what is.
No,
but
yeah.
Risk-reward was in the favor. It was a trade that made sense.
It was a trade that made sense, and I'm happy you bring up the risk-to-reward angle because that was another part of this is with the way that I structured this spread, I had to post up very little BP, slightly less than a 1-to-1 ratio of BP posted up to premium that I'm set to collect. So yeah, that was a factor as well, is that it was a way to get cheaper exposure. My initial thought process was I was just going to grab the 94 calls and be naked because it's risk of the week after all.
Directional, maybe.
Yeah, directional. But those were like $500, and I managed to find a good spot where I was able to get in on this trade, which I posted on the follow page earlier today, by the way. Real fans saw this trade at the time I took it.
Yeah.
But yeah, at the time I took this trade, it was I think $55 of BP for $60 of premium or something like that. So yeah, just a better way to get some more direct exposure. Took a few.
Love it. If anybody just joined us, Gus's risk of the week is OKTA today. It did have earnings and it popped to the upside. He had some long delta on, so it's working out pretty well so far.
Indeed. We'll hop over and look at a chart after we're done here. But first, we got to get into Errol's risk of the week.
First,
tell us about it.
By no surprise, what's going on, Lone? What's going on, Emmett? What's going on, guys? By no surprise, we can go ahead and jump to the next slide. Drum roll, please. If we had a little, what's it called? Oh, the thing with the drum roll. Or whatever.
That just is a drum roll.
The noises.
Oh, like a soundboard?
It's like a soundboard. It's so
I've been saying I want the soundboard, but I can't be trusted with it. I would do too many stupid things.
Oh my gosh, you with the soundboard might be perfect.
You'd be like, I made 4% on this trade, and I'd be like, car crash noise.
All right. My risk of the week this week is going to be MNQ, the NASDAQ market. No surprise here, but I have a little bit of a short thesis that I wrote up for everybody just to give a little bit more of my 2 cents. Not that it matters, but this is what I'm looking for. So we got a couple primary levels. We got the 23,616 level, which is a price level we're almost trading at the close. And then we got 23,804. So there's a couple levels I'm going to be looking at for a potential short. 23,616, that one, maybe sometime tomorrow if we get a lot of, I hate saying selling pressure, all that. We'll wrap back around to this trade if we take it. But tomorrow, if we're trading at around the 23,616 level like we are today, I will look for a potential short position. But there's that little yellow line like above that high, and I think that one says 26,650 it is. So my short bias for this first level is intact until we continue to trade above 23,650. A little bit of the justification for that is because there's a lot of thin volume above those price levels. So the logic behind that is if I'm getting short, I don't really want to be getting short to the upside if we keep pushing to those thin volume price levels, because then it's going to be a lot easier for price to rip through those thin volume, low volume node areas is what they're really called. So I'm going to be looking for a short until then. The way that I like to look at it is it's like, okay, I call it the IP, like the invalidation point. It's like, all right, where's the level when I'm trading directionally, especially with these futures, so I can protect myself? where's the level that I want to get out? Like, I don't even want to be in this trade. My trade thesis is invalidated. No ifs, ands, or buts. And that's like that 23,650 level. So in my eyes, if I can snag an entry at 23,000, let's say 620, that's what, 30 points of risk. And if you're using the micros, 30 points times 2, that's about $60 per contract of risk that you have on the trade. So I'm going to try and structure the risk management on that trade that way. But that 23,650, if we keep shooting beyond that point, I'm going to be looking to reposition and be a little bit patient for the second level. But clearly, you can just see my natural short bias. Like, I'm waiting for short opportunities instead of just getting long. And that's really shining through in my personality. It's like, just waiting for the short opportunities, like rip to these levels so I can position to get to the downside.
Yeah,
we
man.
got to rip there.
Stop doing that. Stop doing that. Just get long and wait.
Oh,
it's the greatest strategy in the world. I've been deploying it for years now.
Yeah,
just get long and wait.
Just get long, bro.
With shorting, I don't inherently think this is a bad trade at all. I think that this is a great TA and that you absolutely could catch this move for the record. But yeah, I mean, just with shorting as a whole, I've gravitated toward being so bullish in general and tending to be long delta in most situations, just because, again, brain dead logic here, but it's just true. Stocks want to go up. They want to go up a whole lot more than they want to go down holistically across the market. And you can't, a stock can only go to zero. It can theoretically rip upward to infinity. It can only come down to zero. So I don't know. Those have kind of been my two lines of logic as to being long a little bit more.
I mean, OKTA was beaten down a little bit.
Yeah,
I mean, it was kind of like a pot, not really like a pot.
I'm just consistently doing the opposite. I find that my most prominent strategy is just looking for sell-offs that I think are too big and unjustified, and trying to get in those spots and let the recovery happen. But yeah, I like this trade.
Risk of the week. We'll see how it pans out, and we'll circle back on Thursday and we'll give a little recap how these.
Yeah, we always mean to, and we kind of never do.
We'll circle back around to it if it was interesting enough.
Yeah, that's true. That's true. But anyway, that's what we got there. I'm seeing in chat, did anyone sign the petition to return Uncle Herschel the Cracker Barrel logo? I have not seen that petition, but if somebody could send that my way, I will happily sign it, because I am long Cracker Barrel, as we have established, and part of my TA in being long Cracker Barrel is that if they revert back to that old logo, I think this thing is going to fly. So yeah, please plug me in.
Imagine what a marketing scheme that would be.
Yeah, it's true.
Go back to the old logo. Like, at that point though, that could work and would make sense from a marketing standpoint.
Yeah, Trump had a very funny Truth Social post today regarding Cracker Barrel, just in his typical Trump speak, and he was encouraging them to revert to the old logo. But he did say one thing in there that I thought was very apt, which is that you have a multi-billion-dollar marketing opportunity here now. Now that you have made this blunder,
they have the attention.
Yeah, you have all the attention in the world on you, and you could play your cards right here to come out at even higher highs if you so choose. So yeah, but that Cracker Barrel trade, that's been working really well for me.
I'm just so curious. It's all hindsight, but I wonder if some of these marketing teams, like, this worked out way better than we expected in our favor, so let's see what we can do with it. Like, I wonder if that's the thing, like, get a reaction and then figure out how to maneuver that extra attention that you just got.
Yeah.
Like, I wonder if that is a mindset they go into it with. Let's just see what reaction we could get and lean on our skills to see what we do with it.
Well, yeah, it's true. I certainly couldn't tell you the last time, if ever, that Cracker Barrel was discussed this heavily on the national stage. I mean, this has been amazing for brand awareness. I mean, like last Thursday when we covered Cracker Barrel, there were people in the chat that said, "What's Cracker Barrel? I've never even heard of it before."
Right.
And that's because Cracker Barrel did something so heinous that we feel compelled to talk about it, and then suddenly their brand recognition goes through the roof, and that perpetuates, all across any social media that you look at, whatever. Everybody's talking about Cracker Barrel right now. So yeah, I think that they do have an opportunity, and like I thought that this sell-off was a bit too much for a logo change. I think that if they change the logo back, the recovery will be far too much, and then I will be looking to short Cracker Barrel after I take my 15x profits on these calls. So yeah, it's an interesting situation, but yeah. Also, is it insider trading? If I sign a Cracker Barrel petition, like, there's an ethical dilemma here.
There might be an ethical dilemma, but what does this petition look like? Is it like if we get X amount of signatures, do we have anything to Let me see what we got.
Yeah, I don't know.
I'll let you know on that.
I don't even really know what that entails. But I mean, I guess if it got enough signatures, I mean, is Cracker Barrel? That's the thing. Is like inside Cracker Barrel right now, internally, are they gaslighting themselves into thinking that this was a good call somehow? I mean, I know that the CEO has said before that consumers prefer the new restaurants over the old restaurants, which does not seem to be the opinion that is widespread everywhere right now.
Yeah.
So yeah, are they delusional, or do they think that this is working?
I have a quick take on a little bit of that. I kind of think people care a little bit more now. I think it's a little bit of both. I think people care a little bit more. This should have gone with the Cracker Barrel segment. But I think people care a little bit more now because of the fact that people care. Like, oh, I used to go to Cracker. Now I'm upset. Yeah, actually, yeah. Even though I forgot Cracker Barrel was sitting down there and I haven't been there in the last 5 years. I feel like there's a little bit of that element at play.
Well, certainly, I think everybody always wants to jump on hate bandwagons whenever they present themselves.
I agree. I think that's the human nature again in it.
Well, yeah. I mean, I think that in internet culture, and I mean, it's pervasive and kind of a problem that this happens often. It's like, who do we hate this week? You know, and like often it means nothing.
Right.
And I will say too, and I don't know that this necessarily applies in the case of Cracker Barrel. If you're not, well, I should say. Okay, here's my statement. Here it comes, guys. The best thing you can do on the internet when you're the person that the internet hates for the week is nothing. You absolutely nothing.
Do you ever see people just shooting themselves in the foot and you're like, what are you doing?
Yeah, no apology video.
What are you doing?
No tweet. Don't get in Twitter beef with anybody. Do nothing and wait until the next people are hated, because it will always turn over. I mean, Mr. Beast did that. I don't even remember what the thing was, but I remember there was like a cancel Mr. Beast splish.
Whatever he did, success, you forgot what it was.
Yeah, exactly. I don't remember what it was. I never really looked into it too much in the first place because I don't really. Yeah. I try not to spend too much of my life worrying about people's lives that will never know I exist. But but like it was perfectly handled. He never ever touched it, and then the internet just moved on to hating the next person the next week. Yeah. I think the same thing is liable to happen with Sydney Sweeney in her situation. So. Yeah, just across the board, the best thing that you can do is nothing. I don't know if that necessarily applies in the case of Cracker Barrel, because, like I said, and then this is why I tripped up at the beginning. If Cracker Barrel is not going to change this logo back, they should do nothing. The only reason they should do something is if it is to say we are changing the logo back. But yeah, I don't think Cracker Barrel should be trying to get crafty or apologize for this or whatever. I mean, yeah, you just got to own it and move forward if that's what they're going to do. So we'll see. Yeah. But yeah, I got Cracker Barrel like almost perfectly to the cent at the bottom here. I was like mid-50s was my buy.
Yeah. What was that ticker for Cracker Barrel again?
CRBL.
CRBL. That's what it
was. I have the chart up over here. But yeah, I have. What do I even have? I have a naked 70 call. It's 143 DTE. Then I also took this bullish put spread, which expires in December, 115 DTE. Just needed above 55 by that time. But yeah, that's what I'm looking at. This I believe these cost me like 60 or something. I 5 or 6x'd on these calls by now. And then yeah, this is going swimmingly as well. It's just in the age of instant information and 24-hour news cycle. It just is becoming increasingly common.
24-hour news cycle is crazy. We get 24-hour news cycle though, for real.
Yeah, it's true, and it's just in that age and in this age of social media and where people just love to jump on these bandwagons. I just often think that these sell-offs and these run-ups become too parabolic. People care a little bit too much.
What was the? What were we mad at? What were we mad at M&M's again about? Guys, what were we mad about? No, for real though. What were we mad about M&M's? Do you know?
M&M's?
Or let us know, chat. Yeah, Grumpy Mike brought up M&M's. I was like, oh, was there a little commotion about M&M's that they did a while ago? Before I paid too much attention to the marketing that these big companies are doing.
That green M&M in the commercials was hot. They took her out.
Green? I'm colorblind, so I'd never seen a green one.
Oh, you know, it's the hot female M&M, man.
Oh, that one.
Yeah. She was a baddie, but they took her out.
I think I know exactly what you're talking about, though. Actually. Yeah.
Sally from Cars is kind of a baddie too.
I could have swore that M&M's name was Sally.
Non-human baddies.
I could have swore that M&M's the female M&M her name was Sally, I think.
Is this gonna?
I could have swore unless Sally's just like one of those names that
Green M&M's
right off
character name
right off the bat.
Miss Green.
Miss Green, of course.
They're really creative.
Miss Green was my 6th grade teacher's language art
Here, we're talking
English
M&Ms.
teacher, Ms. Green. Shout out to Ms. Green.
Let's pull up Hershey while we're talking M&Ms, man. What are they doing? Whole bunch of
Ms.
nothing.
Green was the best English teacher.
Ms. Green was the best English teacher.
She was. No one with a brain hates Sydney Sweeney. Yeah, I almost already feel like the whole hype is already, or the buzz is cooling a little bit.
Yeah, did they ever come back down? I guess not. No. The move happened and we've kept it.
Yeah. I mean, like, the buzz online is kind of cooling a little bit. Like, I wonder what's going to be next. I don't think there's anything in the headlines that surprised us this week yet.
We are mad at M&M's because they use red dye number 5, which is a no-no for some reason.
Oh, that's valid. That sounds bad. Red dye sound bad.
I mean, I'm an artificial coloring hater, I guess.
I mean, is it good for you?
I try to avoid them where I can.
Is it good for you? Is red dye good?
I mean, like, that's the thing. Is like with a lot of this stuff, food dyes, sucralose, aspartame, you name it. It's like, I think at most it's zero sum.
Yeah.
and at worst it's way worse or a little bit worse. I guess at worst it's way worse. But yeah, I mean, I think at most of these things are zero sum. I try to stick to what grows from the ground or has a mother.
Well, whoever is running the red dye companies, I know they're mad right now.
Yes.
And lobbying.
The food dye companies are getting killed, and can somebody tell me the ticker of that giant high fructose corn syrup manufacturer? If anybody knows that offhand, I know there's a high fructose corn syrup manufacturer that's getting hit. Of course it's not good.
Thanks for the confirmation there, Lone.
Yeah, we appreciate that. Of course it's not good. That's such a good response. I mean, they make, I don't know which red it is, maybe Red 40. They make one of them from beetles. That's how they do it. I remember, here, I'll go on a soapbox. This is not market related at all, and I'll keep it short. When I was young, I tried to tell my friends, like, this is like 2nd, 3rd grade, and I tried to tell my friends that gelatin is made with horse hooves, like, because it is.
Why you gonna come up on this live and tell that to all of us? None of us are eating gelatin.
It's an empirical fact. They put ground up horse hooves in there. They have forever. It's how you make gelatin. It's not Jell-O the brand. It's what goes into gelatin. Right. And I tried to tell my friends that, and they clowned me. The whole lunch table laughed at me.
Good.
One of my friends was like, "This guy said Jell-O's made with horse hooves." Will Hummel. I remember that.
Will.
And
Will.
but he the whole table like clowned me for it, and I was like, "No, guys, like I'm telling you the truth." And this is 2nd grade. We don't just like have phones like these kids these days. We could just whip something out and Google it.
Right. Fact check.
But yeah, I was so right. And so I'm vindicated in my adult life now, knowing that I'm right. And I hope that everybody at that table at some different point stumbles across the fact that it's made out of horse hooves, and they're like, "Damn, he tried to tell us."
I'm a fact set right over to Will. But just wow, that was when the public laughter got the confirmation on what was true before we could fact check.
Yeah.
With our devices. A little bit of off bar growing up, my Dorita and Terrell, my brother and sister, they thought I was, or just didn't know my colors growing up as a kid. So blue and purple was like the first one where they were like, "Yo, you just called that blue, you just called that purple. Ha 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 ha. Errol doesn't know his colors. Little do I know I'm colorblind." I find out in middle school I'm actually colorblind as to why I didn't know my colors and I got mixed up with them.
Yeah, it's always hard to kind of figure those things out in early childhood.
It was one of those things too. Well, I remember I had went to my mom and I had said, I don't know if anybody has done those colorblind tests where you can see the dots.
The numbers.
Some of those are for real. Like a lot of those, I can't see what's in those, even if you can. And I had went home and I told my mom, I was like, "Yo, I actually did a colorblind test. Like, it's pretty consistent. Like 90. Like I actually am colorblind. Like I knew it." And she was like, "Honey, I know." I'm like, "What do you mean you know? You never told me?" So I guess they already had signs from when I was little about being colorblind.
Yeah,
they just never told me, so I don't go around like I'm colorblind and I have a disability.
Maybe they didn't want it to limit you. Maybe
exactly. Yeah, I think that's what it was.
Yeah. I know that's a thing, experience that people with dyslexia will share a lot too. Is that like when you're in kindergarten, everybody's just like, "Oh, like this kid can't read. Like why is he so behind on reading?" And then at some point you're like able to actually articulate like, "No, that doesn't look like an M. It looks like a W."
Right.
And then you
W's in the chat.
W's in the chat. M's in the chat.
It looks like a W.
W's in the shot. Anita Maxween. You guys don't know about that.
No.
What's up, Luis? Good to see you. Hope you enjoyed your time with Tom.
Yeah, Luis, what's going on, brother?
Looks like it was a blast. Allergies were a recognized thing back then. That's true. The allergies. I will say this. All right, I'm not one of these, "Oh, all these kids got autism these days. What's going on, people?" Okay, that's diagnosis bias. We weren't looking for it, and now we are, and we're spotting it at higher clips. I understand that. These allergies, though, man, how is every kid in the world allergic to peanuts now?
Yeah.
I don't understand.
Yeah, like grow up allergic to peanut butter.
I'm saying they're fugazi.
Is that a thing though?
But like
I thought the that allergy was started to slowly go away. I haven't been around a lot of kids.
I don't know if it's starting to go away. I think someone will figure out a vaccination or something, right?
Something.
Like, surely we can do this. Is it
by this
just not
point-
high on the medical tier list? I don't know. But yeah, somebody tell me in chat if there was a bunch of kids with food allergies when you were a kid in school, because I know that when I was a kid in school there were certainly the peanut-free table in the lunchroom, and it'd be full. I mean,
but rightfully so. Yeah.
Microplastics in your blood. Where did that even come from? This is some unnamed person.
It's on you. Lobbying. We got the lobbying.
What the heck is that?
It's funny.
Oh, when it says natural flavors on the label, the juice or drink generally has beavers like you talking like cojones, like beaver cojones. I think. Okay, look, I don't want to do the horse hooves thing to other people, but I think you just made that up. I think you just made that up, Devin. What is that? How are you guys?
Have you ever seen those comments where it's a long comment and then the last 3 words is like, and I just made all this up?
Yes. Yeah, I see that all the time.
Those are hilarious.
Yeah, and I don't know what I'm talking about. I'm spreading
I just made
misinformation. Yeah, I have this happen to me all the time.
Setting up NVIDIA. Let's touch on that before we wrap for the day.
Yeah, NVIDIA. What's not to say about NVIDIA? Can somebody enlighten me to what the hell happened on this candle on the left? I don't recall what could have given NVIDIA this price action.
So we have earnings after the bell for NVIDIA. So what is that, Luis? August 27th after the bell. You're not looking at any NVIDIA earnings, are you? I'll look at the options chain.
I probably won't. That's one, like these Mag 7 super high profile earnings, like that's one that I'll be looking to play at open the next day in the other direction after the move. Like, because I think that just with NVIDIA, whatever we wind up trying to price in is going to get overly priced in, and there will probably be some kind of snapback to averages, whatever that even may entail. So yeah, I'm looking forward to it and seeing how this moves the market and the implications, but I don't think that I'm going to personally make a play.
Yeah. AKA don't know, don't care. I'm in the same boat. But Luis, I'm not going to be trading earnings for NVIDIA, but I'll take a look at it once it drops. And then maybe if it's a little bit of an overreaction to one side, then maybe we take a look at it.
No, swear, look it up. I couldn't believe it. Okay, Devin, I'm going to Google this right now, live on air. Natural flavors and beavers. It autofilled. Natural flavors may contain castorium, a yellowish, waxy substance secreted by the castor sacs of beavers.
So it's true.
Vanilla extract especially, apparently, but also raspberry and strawberry. It is recognized as safe by the FDA. Okay. I horse-hooved somebody. I eat my words, Devin. You are correct. What the hell? What?
I horse-hooved somebody. I horse-hooved somebody. Literally right after.
I've passed my trauma on out into the world.
Ayo.
Literally right after.
Literally, that's how it happens.
Nobody believed me about this crazy food fact, and I was like, shut the hell up. That's not true.
Literally.
Oh man, they're poisoning us. I think that might be part of the calculus here. Oh, that's hilarious.
Bob Sala got a short call spread on in NVIDIA, feeling a little bearish this week.
I think that that's a reasonable take. But anytime something is, extended this far upward and running, it feels like it's going to be hard for their earnings to kind of keep up with that.
Right.
You see those little breathing phases a lot. We just got it with Palantir, and it doesn't mean anything. It doesn't have any broader implications. But yeah, I mean, if you put a gun to my head, I might have to get short.
Yeah.
Just because, like...
That takes a lot for you to get short.
It does.
Right.
You know how much it does. It's just... Yeah, I don't know. NVIDIA, it's like... NVIDIA's like LeBron. Everybody's going to talk about LeBron. Everybody's going to play LeBron in their fantasy lineup, but...
Because it makes sense.
Somebody's got to fade LeBron.
Makes sense.
LeBron has bad games.
Right. I'm not stepping in front of that train. Yeah. On occasion.
No, I don't have to physically step in front of him. If I had to physically...
Well, it's like that pun fit the reality. And
if I had to play big bank, take little bank with NVIDIA, I probably would keep my wallet in my pocket.
Yeah. I'm not taking the charge. I'm not taking the charge on NVIDIA. I'm not stepping in the lane. I'm not doing it. Anything else to add on before we start to wrap for the day?
Nothing else. Excited to see how these NVIDIA earnings move the market. Bob with the 190, 195 bear spread. Okay. That's an interesting one. I like it. Yeah, giving yourself a little bit of breathing room there too, so that's good.
We got OKTA, and then we have NASDAQ for risk of the week. We will be back Thursday to touch on how we're managing these positions and what's going on with them. We'll see how NVIDIA performs after the bell this Wednesday. Thanks for taking the time to hang out with us. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.